Hey guys, I want to talk to you about whether or not the IRS owes you money. With the whole COVID-19, there's just been so much going on. Businesses have been opening and shutting and closing. They've also been purchasing so much equipment, PPE, so that they can remain operable for their customers. So one of the things I want you to think about is how to maximize your business tax write-offs. And this year more than ever, it's going to be extremely important to do that. So the very first thing I want to talk to you about is business equipment. A lot of you have purchased new equipment so that you can literally sustain your business. One of the beauties of that is that this year you're able to write off the cost of that equipment all at one time at a maximum of $2 million. That's going to come under what we call Code Section 179. Why is that important? Because typically equipment being an asset has to be written off over time. So if you spent $5,000 on equipment, you're only going to be able to take $1,000 per year over the next 5 years. But this year, you can take a Section 179 deduction and write it all off in the same year, up to $2 million, whether it is new or used equipment. That is really a great asset. And you want to make sure that you do that right now, because 2020 is the year that we want to get all our expenses in. If you are paying those expenses by credit cards, you want to make sure you do it the right way, because you can literally charge something on your credit card on December 31st and get a full write-off of that business equipment. Whether you pay for it this year, put it on a credit card is considered paid. If you operate as a sole proprietor, just an individual doing business as, or if you're a single member LLC, you can literally have that credit card in your own name and get a write-off under your business. But what happens if you are a corporation? If the credit card is in the name of the corporation, you can still get a write-off because it's in the name of the corp. But if you are a corporation and that credit card is in your individual name, you have to make certain that the corporation reimburses you for the credit card expense and that you not take the payment that's in your individual name and write it off through your business. That means that the credit card is in your name, you make the payment, the company reimburses you. If the credit card is in the name of the business makes the payment. Now, the third thing I want you to consider doing is stop billing your customers. And you may think, what? Stop billing my customers? But let me tell you why I say that. You want to defer as much income as possible. So that means when you get in December, and if your customers owe you money and you're invoicing them, be okay not to deposit that money until January 1st. And here's the real big kicker behind all of this. I want you not to assume that you have too many tax deductions. Why? Because this is a year that you want to have as many tax deductions as possible and actually take the income that you're earning and turn it upside down and have a loss. And what, Carla, a loss? Yes, a loss. I want your expenses, if you have them, legitimately to exceed your income. Why is that? Because this year, under the COVID Act, which you call the CARES Act, you're able to literally have a loss on your taxes and go back and get money from IRS. Yes, I said go back and get money. So let's say we end up with a $20,000 loss in 2020. You can carry that loss back for 3 years. You can take it back to 18. And if you pay taxes and still have a tax liability, you could potentially get money back from the government. You could carry it forward to 19 and potentially get money back for the government. So this is a year that you want to maximize your deductions, give it all you have, and do not be worried about whether or not you have too many deductions, because there's never too many deductions. You can use that to go back and get money that IRS could potentially owe you.